Welcome back to Worldie Unboxed, the Founders Edition. In this episode, we're joined by Derek Sakamoto, a three-time founder and the creator of Private Parachute, which is an insurtech startup that we'll get more into during the episode. We will dive into how and why Derek embarked on his entrepreneurial journey and discuss some of the lessons he's learned along the way. In our conversation, Derek outlines his bold vision for Private Parachute and opens up about the challenges he's faced as a solo founder. All right. Let's talk to Derek. So Derek, welcome to Worldie Unboxed, man.
Thanks for having me.
Yeah, man, it's good to have you on. I know we've talked about it a little bit, so it's good to finally make it happen. So you have like a pretty interesting background. You've done some professional skiing, like you've been an influencer, you've been a programmer, you've been a consultant for a little bit. What kind of like led you down the entrepreneurial path or got you like moving in that direction?
I always wanted to be an entrepreneur because that was literally the only thing I knew. My parents are physicians, and the only other people that would be friends with physicians were entrepreneurs, and I didn't want to be a physician.
Yeah, I guess that would kind of narrow it down. So you always did. So you took a kind of like a serpentine path to like entrepreneurship then, going through being a consultant, doing like I guess skiing that could be considered like, oh, you were an influencer. So you were kind of working for yourself at that point. So like entrepreneurship, but like, why not directly jump into it?
Well, that happened like while I was an entrepreneur, actually, the professional skiing thing.
Okay.
Yeah. That was just kind of like living out a childhood dream. And like for your audience, like professional is a very loose term when I say I was a professional skier, but I've always paid to ski basically. So,
I mean, that's a pro to me.
I mean, I think that my career path is pretty, if you look at like the 50,000 foot view, pretty like looks pretty ideal. But then you know more of the details where the reality is a lot more circuitous than you would think. Like, do really well in high school, go to a really good undergrad, then get a job as a management consultant, then jump into startups. So it's like, that's kind of the path that I took, but the day-to-day was a lot different. And as far as like, me personally, it's like I could never really like sit still with anything, and I wasn't like diagnosed with ADHD until I was like 27. So and I have like very severe ADHD, but me not being able to sit still was on the side. I would always find ways to fund my hobbies, and that was really through like volunteering. So in college, I ran the Winter Carnival at Middlebury, which is the oldest student-run like event in the country. And I also ran the cycling team to the point, and I was really good at fundraising for the cycling team to the point that like the varsity baseball coach had to like come onto a call with me because our budget was bigger than the baseball teams. And so when I moved back to Colorado, I wanted to get into backcountry skiing, and I found it to be really hard. And I went to one of the schools that's like one of the 4 schools that has everyone in the outdoor industry. I was a competitive mogul skier in high school. And I just found it really hard because a lot of people would be like, find a mentor. And I was just like, that's just a cop-out and not having a curriculum. So I created a class that made it really easy to become a backcountry skier.
Really? And you did this?
That's what got Arc'teryx to sponsor me. Yeah.
Oh, okay. Was that your like first official startup? Was this
Yeah.
Okay.
No, so the official one was Factor, which is still active, and I don't know where it's at now. But so like I went from Accenture Management Consulting in the IT strategy group to Hack Reactor to refresh my computer science degree, to being the first software engineer at a company called Nado, which calls itself an autonomous car company, but they just collect data for vision research. And then they're like got a fleet management place. They're like a unicorn or whatever. And then just working there was hard, and I had some personal stuff that happened overall, starting with like my friend dying in a speed flying accident, and
Oh, wow.
we moved back to Colorado. So when I moved back here, I had a family friend that wanted to spin out a construction management software company from a construction management company. And so I helped him do that. And then when that was winding down, a friend from college called me to start Factor with him. And so then he was at HBS at the time, and we started out at the Harvard iLab. I then moved it to the Bay Area. I think it's back in Boston now. And then after that one, we parted ways. We just didn't work well together. And then that's when Mike approached me. He just exited a telehealth company called Otto, and he was looking to start another company. He had just kind of like this healthcare idea since an engagement with DaVita Healthcare Partners when they acquired Healthcare Partners, and it just kind of like worked out. And then we were SVB clients. We raised all the money from his network, and so he wanted more control. I was tired of the business, so I got bought out.
Okay. So were you bought out like both times, like from Factor and from the business with Mike? Okay.
Oh yeah.
Nice. So 2 exits up under your belt.
Yeah.
That's always nice. Yeah. So what kind of like led you to your current venture, Private Parachute, and maybe kind of like start off with like a background of Private Parachute in a way in which like a 5th grader can understand it.
So Parachute, Private Parachute Inc. is like the incorporated name.
Okay.
It's just Parachute. But the whole point is, in my last company, we raised $10.2 million all from individuals and family offices. And whenever any investor had more operational questions or more questions about our risks and stuff, I would always be the one that had to answer those, send them my way. And that was what I realized, is they just didn't have a lot of options to manage their investments. And they were all pretty desperate for deal flow and really passionate about the investment, but it just like wasn't really like a fair thing. So when I exited that company, I didn't want to necessarily start another company unless it met a certain set of criteria that I could launch my business and like really be committed to it for like pretty much indefinitely. So, and for that to be true, I had to be like academically interested in it and everything.
Yeah.
But what I was thinking of was becoming an investor, and I wasn't getting a lot of traction. And then I was watching just like The Big Short, and I just was wondering, well, in my experience with all of these investors, where they're private individuals and family offices, the money part is actually not really the issue. You know, 1,000, 150,000. It's like by the time they say yes, it's indifferent. So how much would it cost them to protect their initial investment? And that's how it all started. And what I found was that there was not a lot of good data out there. And so what Parachute does is, it is a simple insurance policy that if you wrote an angel check, or let's say, you know, Aaron's aunt wrote an angel check to Worldie for $100K.
Yeah.
And Aaron's saying, hey, you know, I appreciate it, but I don't want to necessarily make you feel bad that you lost your money, that I lost your money. You should take out this policy. And what it allows an investor to do is basically cut their losses short in case of the worst happening, which is the company shuts down. So if Worldie shuts down, Aaron's aunt in this situation would get her $100K back.
Nice. That really makes the friends and family round a bit easier to swallow for you know, maybe the unsophisticated investor.
How do you make that work from your end in terms of insuring it and basically giving them back everything that they invested?
It's a very expensive product, one. but it's also priced as a swap. So I had, this was an idea that I came up with while I was like just sitting on the couch, and I had no insurance experience. The only thing I had closely related to insurance was I knew the first CEO of Spot Insurance because I rode the chairlift with him a couple times at a ski nerd conference.
Oh yeah.
And I literally just like DM'd him on Instagram. And I said, "Hey, can you call me to like tell me about insurance and how to create a new insurance product?" And his background was also not insurance. He was more of a sales and marketing guy. But that was like how it all started. And I just kept asking questions along the way. But me not having an insurance background also meant that the financial model that I created had to clear from a cash basis. So that's really the innovation, because I've accounted for all the costs of everything, the risk capital, the swap, and my overhead with my pricing. And it makes it very appealing to reinsurers and anyone in the insurance market to back it, because I've done all the legwork for them. Most insurance people talk in accounting terms because everything is levered up anyway. So, they're trying to hit all of these heuristic like benchmarks, 60% loss ratio and all that. And I hit all those, but the fact that I did it from a kind of like a first principles basis, like just looking at the cash, that made it like the structure really innovative. So there's been other people that have tried this before, but like when I've talked to the experts there, they seem the most optimistic about my solution.
No, I think that sounds pretty dope. Like, just to kind of go back to the example with Aaron's aunt, who's like, okay, she's gonna, because I like that example anyway. She's gonna invest $100,000 into Worldie, and you kind of say, whoa, ho, wait, aunt, like, check this out. You can pay $100,000, or you can invest $100,000 into Worldie and put your $100K at risk, or you can pay, and I'm going to make up like a premium for you. Or you can pay $110,000, and your $100,000 would no longer be at risk. And what you paid, that $10,000 is what you've kind of like put away to like protect the $100K. And in the event Worldie goes under, you get your $100K back, and you've only, in essence, lost $10,000.
Yep.
Yeah, I think this sounds like a pretty sweet deal, right?
Yeah, and then there's like some other aspects of this that are really interesting, just because insurance is heavily regulated because you get a lot of tax benefits with insurance. So
yeah, no, that's pretty awesome. In the world of investing, like typically you kind of go in with the realization that you're putting all your money at risk. There's no like, parachute to kind of borrow your company's name. But like, yeah, I think that's a pretty cool point. So how far away are you from being a private parachute away from being operational?
Ideally 6 months. I'm like in the middle of that. I have to raise a lot of money to do that in the process. So that's kind of where I'm at right now. It's kind of navigating the world of insurance is navigating a bunch of like chicken and egg problems, basically. And so that's kind of like what I struggle with every day. And so, I think things are moving in the right direction. Took real steps to like start raising, now. So like I'm in the midst of pitching like a bunch of investor meetings. But the reality is like I have a bunch of clients coming to me every week. And so like I have a new client coming to me every week. And it's much more than just your people that are like investing in like a startup to get rich. One thing I learned by working with the investors that I work with is like what people really care about is not like getting rich, because everyone that's accredited is generally well off. So like why put yourself at risk? And it's investing in something you care about, whether that's like a local company, whether that's like for Worldie, maybe it's like someone where their, life was really impacted by learning soccer really early. Like, and so that's what mobilizes people. What people are scared of doing is investing in the things that they believe in. And so that's kind of like what we help with is like, we'll protect your capital while you invest in things that you believe in, and you may not be investing for the, you probably aren't a professional, so you aren't going to be doing like the math of saying, hey, we're aiming for 1 in 20 investments to be 100x return. You're going to be like, look, this is a solid private equity deal that has like a 75% chance of doing a 3.5x on a 5-year timeline. And I know that I won't be losing my money in 2 years because it'll be, it'll hit some milestone of like some level of profitability or some level of EBITDA. And I can then, my investment then is de-risked. So I can take out parachute coverage for like the first 2 years until that milestone and be further protected. And then, my IRR in a 3.5x deal would be 26% with no protection. But there's a 25% chance I lose everything. With parachute, my IRR and cost basis goes up, but my cost basis goes up, so my IRR goes down, but it's still like a 20% IRR. So a riskless 20% IRR, still pretty good. And that's like, these are not deals that necessarily need to be earth-shattering, defining deals. These can be the Worldies. These can be like any of these other businesses. It's not like OpenAI or whatever. But frankly, I've had wealth managers tell me they're straight up that they would be able to sell. Like one guy told me specifically, he said, I would be able to sell $15 million more of OpenAI and SpaceX secondaries if I had parachute, because they would all insure their $1 million position with parachute.
I mean, that's pretty cool to kind of hear from, especially from your perspective. And I mean, would you like kind of thinking about this long term? Do you think this would change the behavior of investors if they're, kind of going about this with a parachute on? Would it make them more risky? Like, would they take on more risk than they would normally when they don't have like an insurance backing them?
I don't think it would necessarily make more people more risky. I would say it would activate more people. So, there were 2 investors overall that kind of inspired parachute. One was, and I think we talked about a lot of these issues with the last one, where he was a consultant who did really well, wasn't like rich like some of our other investors were, like 9-figure rich. He was just, your general wealthy, working guy. Just like he could be
a normal rich guy.
Yeah. Could be like a partner at Bain or Cooley, right? Like where you guys, so he can afford to lose the 100K pretty regularly, but it really hurts. Like it hurts a lot more than you would think. And, right. So we talked about that use case. I had another investor though, where he was a downstream supply guy. Basically, he had a trucking company for oil and gas and was worth, mid 9 figures. And his mindset overall is, I rather invest into new startups with the rest of my money before I die instead of donate it to charity, because it creates more sustainable solutions for society. And so, and I'm not like saying like people shouldn't donate to charity, but there's a lot of altruistic or like good things for the world that can be solved better with a business than could be necessarily solved by like just a handout. And that's what I think it could activate a lot more. I also think overall, if you look at the trends within what's going on and where we're at right now, is accredited investors overall are growing at like 17, 18% a year. And basically, the accredited investor designation means you can afford to lose 100K and not notice it. But that's growing at 18% a year. And at the same time, only, I don't know, the numbers are really mixed, but it's maybe like 2 to 20% of those accredited investors actually participate in the private capital markets directly. And At the same time, 85% of accredited investors donate $35,000 or more a year to charity. And so it's like, I think there is a real push that people do want to support the causes that they care about without doing it, without, taking more risks. And I've never met anyone that's like in that position where they're like, if you're an accredited investor, you're normally like pretty good with money. Like you've normally like been pretty successful. And so you're not going to do something that's like doing something totally out of your wheelhouse. I also think overall there's another problem too, which is a lot of those investors have, if you look at like the wealth management data and then also POs, I think there's going to be a growing problem where the public investment opportunities are just not there. If you look at billion-dollar valuation IPOs or IPOs that have a sub-billion-dollar valuation, like a Shopify or a Viva, like those just don't exist anymore. And so, right, Shopify and Viva, they both did like 100x on the public markets. Whereas if you're a billion-dollar company, going from a billion to 100 billion is way harder than going from like 400 million or 40 million to 4 billion or 400 billion, so like, I think the general investor is going to just need to be more aware of the private capital markets just by the nature, just by current trends.
Yeah, no, I think that's right. So I would think there'd be a lot more fish in the water, a lot more competition. So who is the biggest competition when you think about it from like private parachutes perspective?
Well, like right now there's no competition, but like the market I'm going after long term is like what every private equity firm in the world is talking about right now, is activating that retail accredited investor. The thing that I think is really hard for them to understand is that people are not motivated by, new investment options of like something on a spreadsheet. They're motivated by being able to get a real business case on something they care about.
And is there, kind of switching up a little bit, is there like an FDIC type of limit on how much you're able to insure, like even an accredited investor? Or I guess looking down the road.
I mean, it's not like a regulatory constraint. The regulatory constraint is how big my reserves have to be or capacity has to be before me to insure a certain amount. And then I'll have my own diversification criteria so that I am not overstretched into any one position. Right now, I'm looking, generally, it's like I have most of the people coming to me want to insure a position of $1 million. So that's really like what I'm targeting as an upper limit right now.
Okay. So $1 million cap, and then, the rest they would just kind of treat like they would typically have done in previous.
It's rare that an individual or family office invests more than $1 million in a thing if they're a minority owner. If it's a family office operating as a private equity entity, at over $1 million, they're really seeking more control.
Gotcha. And then what are some of the biggest hurdles that you've kind of faced with this company? I would assume like there's some regulatory hurdles that you have to get over. Just being like an insurance company of sorts, you kind of have to do some things, I believe. So like, what are some of the other hurdles that you have to kind of overcome, or what are some of the bigger ones?
Right now, the real thing is that the business model is really unique in that there's a lot of consultants out there that actually can help you launch new insurance products, and they're readily available. But getting investors, especially VCs, to believe that like that exists is pretty hard. The irony is I'm like, this is way less risky than me building a new tech product by building out a tech team, which I've done before twice. And so, because I'm like, it's been I've confirmed it on numerous fronts that we can launch in as little as 6 months. And then if we don't have capacity from our clients, and this talks to more details of some other interesting advantages I have on the capital structure, but it'll be like 6 to 18 months to get the product launched, 6 months if I raise the captive, and which I think I have a really good probability of doing. But that's been the hard part, is that it's just such a new model. Yeah. And then I think like other people, I think a lot of people just generally have biases against this. Like, for a lot of us that aren't professionals, the product makes a lot of sense. For professionals, and I don't know whether this is just an industry bias or if there is actually something behind this, but there is a lot of bias against it. And it's like saying like, oh, founders wouldn't like it or oh, whatever. But I'll say every founder I've ever talked to loves the idea of the product, because losing someone's money directly really, really sucks. Like that's just like a really awful experience. And like, I don't think VCs appreciate that to the same degree, because they, their bet is that they're going to lose some and win on others. But if you're the founder that loses the money, you feel like you lost the money.
Yeah.
Yeah.
Have you thought about like partnering directly with founders so that it's kind of like part of their offering?
I don't want to, because that's like adverse selection. That like just instills adverse selection to me.
Yeah. I can see that.
What I have another idea for a future product that is for founders, but it would more help my customers be able to file claims faster.
Okay.
But all investors would actually really like this product, and every founder I've talked to loves the idea of the product that I have in mind. And that'd be my second product.
Yeah, I can see how that would definitely be very helpful to founders, especially as Aaron and I kind of like think about like, okay, after we do a soft launch, thinking about some type of friends and family round and having that type of like product available. I mean, obviously it helps like people who hope to invest in the company or who might invest in our company sleep a little easier at night, but I know it definitely help Aaron and I also sleep a bit easier at night as well.
Yeah, definitely. Yeah. If I'm getting money from my aunt, I don't want to lose $100,000 of her money, right? But one of the things that I wanted to ask is like, what's the sales strategy? So like for us, it's going on Instagram, on Meta, whatever. And that's, you can like run paid ads, but for a product like yours, how do you get in front of potential, customers, if that's what you call them, or users of your product? Because people aren't really scrolling Instagram for this kind of product.
Oh yeah. And they definitely never will. Like, I mean, unless like, I don't know, they never really would. In my last company, I learned so much from my co-founder and just how to, build relationships, and really like, everything's kind of been with word of mouth referral with these family offices. And so that's kind of how I've gotten my inflow of customers, is I just say, hey, I'm trying to do this and I think it'll help you. And just talk to it on a personal level with people that I already have relationships with. And the family office world is really, really small. So, that's one. The other, and then, it's people come out of the woodwork in every way, shape, or form. I mean, one of the interesting things that has come out is, and I'll say like my whole approach is like what every founder should do is literally just tell anyone and ask everyone for help. And, with that is like other opportunities have come out of the woodwork. I found that state offices of economic development have actually like started reaching out to me to also partner. So
makes a lot of sense.
That's pretty cool. So it sounds like the major strategy here would be like, in essence, partnerships. So like partnerships, whether it be like formal or informal with individuals or entities like family offices or whoever it might be. What about?
I'm really starting with family offices, and then like I don't see like a mainstream like approach for a long time. And there's like some. And the other thing, like I think that people overestimate is how big VC is relative to other markets. VC is like a third of size of private equity, right? Like, and that includes like the search funds and all that are buying businesses. The direct investment world from non-institutional investors is 430 billion. So I'm like, the market I'm going after is twice the size of all of VC. Like if you're thinking about like, how do businesses, the majority of businesses start in this country, it is from this investor class.
So that's a huge market. And I was actually going to ask you about that. But given that it's that big, are you thinking about your company as potentially a unicorn? Do you not want to think that far ahead? Or just like, how are you thinking about how this company might
be? Yeah, no, it's like, it could be the biggest financial institution in the world, like literally.
Is that your goal, or it's just that's a possibility?
Pretty much. Like, I mean, it'd be really, like I said, I was looking for a business that I wanted to start and like live with for my whole life if I was going to start another business. And I think this is like good advice for any founder out there, which is, in my last two companies, I was like co-founder and CTO because I wasn't as married to those ideas. I would just wanted to have experience starting a company. In this one, I knew I wanted to be CEO if I was going to start another business. And so then I knew I had to be like the person that was going to be stuck with it.
And so you've started, 3 companies now? Or you've been...
It's number 3. So there's like 3 of like actual companies, not like random LLCs you set up for consulting.
Yep. Like what keeps you coming back to the startup life? Because it's not easy.
Well, this one is like, I'm just pretty obsessed with the problem. Like that's the other one. Like I said, after the last one, I was like, I'm pretty done with this. But then I found a problem that I'm just like, have become insanely obsessed with. Everyone in the insurance industry is like this, or I wouldn't say everyone, but there's way more people that are quantitatively creative, which is like, I feel like my strong suit in the insurance industry than probably any other industry I've ever been in.
What does that mean? Quantitatively creative? I don't know if I've heard that term before.
Well, I like it, but I
don't know. I think I might be that, but I don't know what it means.
It like just being able to abstract like different problems into just the math and then reconfigure the math to solve the problem.
That makes sense. Do you think that came from consulting, that kind of skill set, or you always had it?
No, I always had it. I mean, I would talk to, one of the guys that I had the best time talking to, he's now a quantitative researcher, but before that, he ran the fund derivatives desk at Deutsche Bank, and like talking to him was so fun. That was like, and then some of the OG InsurTech investors are also of the same kind of like mindset where they can just like think of these capital structures and then like you think of one and just like reduce it to another, and it's really, really cool. And that's all I did and studied in college, was like theoretical computer science. So
yeah, that makes sense. And then kind of like as you start more and more businesses, what gets easier over time? So like what was easier the second time and then even easier the third time?
I think the emotional roller coaster is like easier. I would say that there's like also a big difference between being a co-founder and being a solo founder. And that's something I'm really learning. So the emotional roller coaster gets easier because you just kind of know to like start to roll with the punches, especially like one of the biggest punches is just the calendar. And it's normal of any like corporate calendar too, right? Like no business is done on the 2 weeks of Christmas and New Year's and stuff like that. So you have to be prepared ahead of time. What I found as a difference between being a solo founder though and being a co-founder is like co-founders can motivate each other and like talk each other into a thing. Whereas being a solo founder, you kind of have to like work out your own demons and just become a better person. It's like the challenge than like, letting someone push you to like do something that you don't want to do.
But how do you?
Go ahead, Brendan.
Yeah, no, I'm kind of curious in terms of like how do you like work out those issues? Because like Aaron and I, like we end up like we would joke like talk each other off the ledges all the time because we would take these dark twisted paths and like want to do something that we think is going to be like groundbreaking, and turns out it was just going to break the company. So like we end up like having to talk each other out of these things all the time, or talk each other into things that we're a little bit maybe hesitant to do. It feels like as a solo founder, you might be like kind of in an echo chamber or like in a silo. And how are you able to have that? Or is there an outlet for you? Do you like go and communicate with other founders, or what do you do when you're in those situations?
I think like, yeah, there's definitely like a whole solitary confinement aspect to being a solo founder. And that's like what you got to work out. But I think like to me, one of the things, coming back full circle to like the whole professional skiing bit was like, I became a professional skier by building community. And that was like, just by going and pursuing my own interests, I like built a network of people and like, became really influential for the brand I supported. I'd generate, in the one day that like our sales were tracked, I'd generate $50,000 of sales. I think like for me, to build community, you just like go out to the community and you pretty much like ask for help. And so now I found just like different networks of people. So there's some startup events in Colorado, in Denver, that are helpful, but then also joining some members clubs where there are people that have been there or done that before, but also other people with different skill sets too. And I think like just talking to other people about like what you're going through helps. I think also just some self-awareness. And like for me, the big one was ADHD. And so like really, since I was diagnosed so late, I've really not been good at managing it, frankly. And so like, and there's been a lot of new research that's come out. And so that's really helped me too. So, and then I work out a lot and I spend a lot of time like skiing and golfing.
Yeah. I mean, that definitely makes sense. I don't know. Sometimes like golfing makes it more frustrating than therapeutic, but yeah, I can buy all that other stuff.
Yeah. The other thing like overall, right, is like my life is like pretty designed right now to like start a company where, still a bachelor. I only have a dog. So like I wouldn't, if I had a family, I would be just getting another job by now. Like,
oh, really?
Yeah.
You would jump back into the corporate world if you had
Oh yeah. Or I might do something like you guys where it's like I'm like starting some fun project. I have like tons of other fun ideas on the side. I think like if you meet someone that's a founder, they have like a lot of ideas in general. One of my friends, he's always been a little entrepreneurial. He's always had a job professionally, but like he had a ski pole company, and then he's like been designing like fly fish nippers on the side, and like since I was in the outdoor industry as well, and then also the sportsman industry a bit, it's like we always talk about all that gear and stuff. And it's just like, it's kind of like just a different kind of hobby than you would have of like I said, ADHD, so I can't like sit still. And so like, I always like try to do way too much work, and then I like focus a lot on like figuring out what sports I like and stuff. So I've resolved myself to figuring out that I really just like lifting and not really like any other kind of like workouts.
So what do you do with all those ideas? You mentioned coming up with a lot of entrepreneurial ideas. I feel like I'm the same way, and I try to document them, but I know that I can't realistically go after all of these things, maybe not even in a lifetime. So like, what do you do to kind of like prevent yourself from going off and pursuing like 15 different ideas or whatever?
Well, by the time you like incorporate and shut down like a dozen different like LLCs that like you were like, I have time for it. And then like a year later, you're like, I don't want to pay the taxes and renew my registration for it. You kind of like get over the fact of like having a lot of ideas. I also think like people get fascinated with the idea of like someone can make money doing something that they think's really cool and like kind of niche and novel, but it takes way more work than anyone thinks. And so, that's like, Aaron, to your question earlier, like that's one of the things that gets easier is like not getting distracted by all of the other things that could happen. And that's like what I've really had to focus with Parachute too, is like there's a ton of like other interesting like implications of my business, but I've worked really hard to just focus on like figuring out how to get this product launched when I have no insurance background.
Yep, I can definitely relate to that. And so you talked a little bit about what gets easier over time. What is something that stays just as hard with each kind of rep of entrepreneurship?
For me, it's planning an organization. And that's more an ADHD problem. I think if you aren't good at sales, that also, that is something you need to get over fundamentally. There's an investor locally that I actually think really highly of, named Mark Hopkins. And he told me, just very straightforward, not on this business, but on a previous business. He's like, yeah, if you don't have sales, you don't have a business. And I think a lot of people forget that. It's that's literally all that matters in a business.
Paying customers.
Yeah, we have no business. Yeah.
Yeah. Oh. Yeah. So I think that's, I think everyone can get fascinated and distracted by that. And then the sales part is always hard because, you have to be vulnerable. You're putting yourself out there. You're going to get rejected a lot. That always sucks. There's nothing that's fun about that. But I think the way that I found to make that easier on myself is I love just picking up new hobbies and new sports and having that beginner mindset. And so if you go into it with just saying I'm trying to learn something, I think that that goes a lot further. Frankly, at this point too, it's I think that might be part of my strategy going forward as I start to really get this fundraising round going, which is even if there's an investor that's not in my space, I'm going to just probably reach out to them and just ask them, how would you fundraise for this? Because no one's seen anything like this. And you are pretty an innovative thinker. Yeah. I think just asking for help is always a good thing. I have a friend, Nico, where his motto is every time you ask for advice, people give you money, and every time you ask for money, people give you advice.
I think I've actually heard that before. So fundraising for a company like Parachute, is that just building that financial repository? What goes into the fundraising, or what's the reasoning behind the fundraising, I guess, that you kind of pitch to investors as to why you need the amount that you need?
It's literally to pay consultants to build out the paperwork that I need to get through insurance companies. Because what I have to do is I have to convince an insurance company that they will take me on their books as a front. I pass them a fee, but I also prove that the company is de-risked. But as I get letters of engagement, the LOIs, letters of intent on the fronting and the capacity, that is really what it is. It's the paperwork for that, and then you submit it to the regulators. And there's a ton of consultants out there, like I said, that have done this a lot. So that's been, and paying actuaries and stuff like that. So there's just a lot of expenses to professional services. And then, from a legal capacity, I'll be setting up a few other subsidiaries, which you just kind of have to do in this business. It's all of those fees is literally, that's half the capital I'm raising. And then the other half of the capital I'm raising is just some overhead to do the sales. And then I want some capital to start the tech team. Because one thing that's really cool about my product is, and also a problem with this, is the data out there on startups is really, really bad. And that what the economics of my product allow me to do, because it's relatively low overhead. It's literally just me networking around with a bunch of family offices. And then, my underwriting process is relatively straightforward. Again, low cost, all can be done pretty much by me. And the number of customers I need to be at 20 million ARR is very, very low. Or to support $20 million of policies is I'm going to have 20 to 200 customers, which it's if I spend a day with each customer, which is probably more than enough, and then automate all the, claims and everything. It's like, not a lot of work. Well, it is a lot of work, but it's like relatively simple in my case. Then like the real, question is like, okay, how do we make this better? And there's a lot of data and infrastructure you can do. And the economics of this, since it is so low cost, is I can buy some of the most expensive data out there for companies that most companies can't afford, which is all of the banking and credit data of all of these underwritten assets.
Got it. No, I can see where the cost comes from now. Kind of something that you said earlier when you're talking about like how big you felt or you think Parachute can be. It reminded me of it came out of the Elon book and how he sees or he saw PayPal. He saw it as the potential for being like the largest or the biggest financial institution in the world. And he kind of has the same vision with Twitter, or like he sees like a social media platform and combined with some kind of like financial fintech type platform being like the catalyst behind one of the hugest or the largest financial institutions in the world. And it all is based upon like his evolution of the idea. What do you see as like being the reason why Parachute would be the largest financial institute in the world? Would it be because it has evolved into something that you're kind of like envisioning for the next 5, 10, 15 years down the road? Or is it just going to be a bigger version of itself?
Yeah, it's not just a one product thing. It's like a broader vision where, like, to me, the interesting thing is how do you make the private capital markets more liquid? And like, right, the problem I went after was like, how do you add like the problem I diagnosed with my investors was like they have no liquidity, right? And so like and you need liquidity to cut your losses short. And so invented a way to create a lot of them to cut their losses short. But I also, since I've been a serial founder, I knew that there's only one way to solve liquidity. And like I said, there's been a lot of other things that I've tried out there, right? There's options that have so you could short a startup. There's been other kind of insurance plays. The difference for me was I knew that I needed a lot of cash so I could solve a liquidity problem, right? The only way to make a system more liquid is you add a lot of cash. So I needed to build a cash heavy product that could literally add liquidity to the system, because I'm literally adding cash to the system. It's like, right? It's like if you're in a personal like financial or credit crunch and you're not liquid, what do you need? Cash, right? And so you take out a HELOC or, a second mortgage to get some cash. Like, it's like, yeah.
No, that makes a ton of sense.
I thought of it as a problem of like, how do you make the private capital markets more liquid? And then what I wanted to do was find a product that people would really want that would be cash heavy, that would start adding liquidity. And then I could start doing interesting things with that.
And I'm sure those interesting things you're keeping close to the vest.
I mean, they're pretty self-explanatory. Like, it's like, it's solving any kind of customer problem. It's like I mentioned, I have another insurance product in mind because I know I'll have customers where the asset that they're in is basically a zombie company. So I need to create another insurance product that incentivizes founders to stop running in zombie companies, because it's a miserable experience for everyone. Like, you hit some trigger, then you should sell or like shut down. Like, that should be it. And then my customers can get their claims. Then I don't want my customers to churn. So I have like other ideas on how to prevent churn, and then as I scale, there's going to be other problems too. So,
yeah. As of right now, how do you what do you deal with like in terms of the zombie problem? Like, there's companies that have failed, like maybe not on paper, but they've failed, but they're still going. They're still being able to make payroll.
Right now, I can't do anything about it because, the triggers I'm going to have on my policy have to be very clear, right? Since it's such a new product, I have to be very clear on what my triggers are. And so that's dissolution, Chapter 7, Chapter 11, bankruptcy, or a company buyback, right? My customer has to prove that their equity was wiped out and that there's no way to recoup, their capital.
Gotcha. This is this is definitely changing it up a little bit, but coming out of two exits, like what you mentioned on the latest exit that you were like, man, I'm done. Like I'm not gonna do this again. So what do you do immediately following an exit? Do you think about like obviously the next time around you didn't think about your next venture, but like what do you think about doing? Like, am I gonna like hit the beach and just like chill out for a few months? Like, what do you do immediately following an exit event?
Yeah, my friend Doug Proctor told me, I was at dinner with him and I was like freaking out, just like trying to figure out what was next right away. And he looked at me and told me, take 6 months off, and walked away. And like, that was like some of the best advice, And when I talked to him about it later, he was like, yeah, that was the advice given to me when I shut down my last company. And right, the whole point is not necessarily take 6 months off, but it's like, you just got to turn your brain off for a bit.
So what do you do in the quote unquote 6 months that your brain's off?
Oh, so for me, like, I don't know, I golfed a lot. Yeah, that was like the main thing. And that's like a new sport, right? So I've only golfed for like 3 or 4 years. But I've gotten really into it. And so that was it. I think like you just kind of figure out what to do. The whole point of that is, right, to give yourself some space to like figure out what you actually want to do. I think if you're always rushing to the next thing, then you're going to get into problems. I think that's true of anyone too. It's like, I think more people need to take like these micro retirements that like, Tim Ferriss advocates for or whatever. It's like, taking like 6 months off in some kind of sabbatical, especially if it's not like some actual sabbatical where you're just kind of like stuck out there and living off of savings. Like, I think that's great for people because then you figure out like what's really important to you. Between like one company and another company, I was like living off of savings. And then I was like, I work really hard to try to make money, and money is definitely really important to me, but how much do I actually need? And so I set a budget of like, could I live off of $60K post-tax and like do everything I wanted to do? And it's like, no, I couldn't, but I was at 75, and I don't think there's a lot of like very highly accomplished people that think they can live off of 75,000 post-tax and like be really happy. And I'm like, nope, that's all I need.
Nice. I did take a micro retirement myself. It was called paternity leave. So
yeah.
I think there's also studies out there that like above 70 or 80K, any kind of incremental happiness for more money it's like pretty marginal.
Yeah, no, it's totally marginal. But the problem is people don't realize that. And I think like when people have like FOMO and think that they're missing out on something, that's when they get in trouble, right? Like, it's like, that's when they like step out of their marriage or like do whatever because they're like, I want this new experience because I never had it before. And you're just like, so like the whole point of like having these micro retirements is like really evaluating like what do you care about and like, figuring out what's important to you, and so that like you don't mess it up the next time. Like, yeah.
No, I think that's right. Me and Brandon both had like 6 months to a year off between grad school and starting at our corporate jobs. And it wasn't really sabbatical because we were working hard on trying to launch our business, but I feel like it did give me a lot of perspective during that time because I just had a ton of flexibility and time to do whatever I wanted and just figure out kind of like what the next step, or even like 5 years from now, what I want that to look like.
But yeah. And I think like, to me, the problem is I think like people get that FOMO even more with all the social media stuff. I mean, that was another reason why I quit like being a professional skier, is just like, I was sick of it. It was just like, it's all very cutthroat and like catty and like, and then I spend way too much time on social media and then like feel bad about myself. The trick with social media is like, you're basically, the most successful posts gaslight your audience, right? And they tell you like, you didn't know this before, and you don't even have to be right when you gaslight them. And so like, but if you gaslight your audience, you're going to get a lot of engagement because people are going to be like, what? I never knew this existed. How dare I not be able to do this thing that I never knew existed?
Yeah, social media we could do a whole podcast on social media. But in the last few minutes, I wanted to get through some rapid fire questions. So maybe like 30 seconds to a minute answers to each of these. And we ask kind of like all the guests that come on these questions. So what advice would you give to first-time founders?
I think it's like really, it's cliche, right? But it's the Paul Graham cliche of build something people want. Like you can never do enough user research. And I think people think of things that solve like a bigger problem rather than say, what do you like want? I mean, I have a friend where he literally has been basically retired since grad school because he made like an iPhone iOS customization app that pays him $400,000 a year. And he built it while he was in grad school.
That's great. I wish we had done that. So what's one thing related to startups, entrepreneurship, or business in general that you've changed your mind on over time?
There's a lot of things. I mean, the main thing I see right now is that I think where startups were when I started and where they are now is that I think founders really need to be aware of the position they're in and the capital promises that they're making. And what I mean by that is before, when everything was all new, you didn't necessarily have to be professional. You had to be just like lucky. And I think, I think for all three of us, we have friends in private equity where then like the hot thing of leaving private equity is you go and you start a search fund to build, some kind of like roll-up platform, right? And I think like building a startup, if you're doing like a venture-backed startup, you're promising even higher returns than that. And like you should treat it as professionally as that. I think there's a lot of groups that do, and I think I don't think you need to be a certain age or experience to do it, to have that mindset. But I think a lot of the non-San Francisco markets don't appreciate that.
Yep. And then what's one thing that keeps you up at night about your current business?
Oh, I mean, like right now it's like just how do I raise this capital? It's like kind of like a thing, but it doesn't really keep me up at night because I've really worked on like trying to sleep 8 hours every night. And that's like been a huge change in my life.
That's really good. It's a metaphoric question. It's not literal.
Yeah. Well,
what would you say is the hardest part about entrepreneurship?
Dealing with yourself and holding yourself accountable, especially like for me right now, holding myself accountable is exceptionally hard because all of these things are like on such long timelines that it's not like immediate. And so if you're someone with ADHD and you need like immediate feedback to like keep you motivated and engaged, like that's a problem that I struggle with every day.
I mean, me too. And
yeah.
What would you say is the most rewarding part about being an entrepreneur?
Highly debatable if any of it is actually rewarding. It's like, I'm amazed that like, right, this is literally an idea that I came up with on the couch while I was like just being a bum and like, taking some time off. And then I just got totally encapsulated by it and totally like engaged with it. And so like, I mean, I just kind of want to see it through. That's it.
And then what advice would you give to an aspiring entrepreneur?
Just do it. I don't know. You don't really need a lot to like, I mean, if Brandon's kids open a lemonade stand, they're like kind of entrepreneurs because they're literally just selling lemonade on the corner.
Yeah, no, I can buy that.
Like, you don't have anything to lose. I think people like think there's a ton of risk and everything, but it's like, there's really nothing to lose. It costs $200 to incorporate a thing. You don't have to be ambitious about your company. You can just like try to start something and just like start reselling something. And the more you do that, the bigger you can get. And like, it's something I wish I did earlier. Like I was scared of like, what are all this legalese in my, Accenture agreement and whatever. And the reality is like, when I look back at it and understood how to read legal documents better was I could totally moonlight on anything that was not related to IT strategy consulting. And so I could have like tried selling, I had a friend where he was at Deloitte and he started a company that was topcondomsofcanada.com from reading 4 Hours Workweek. And that is literally his passive income machine. Like,
Nice.
So just as we wrap up the podcast, where can people find you? And is there anything that you want to plug?
I mean, if you're interested in Parachute, Derek at parachute.fund. And then LinkedIn. I did finally make my Instagram account public again. You could figure that out. Yeah.
Well,
Nice, man.
No, it was a fun conversation.
Thanks for having me.
Yeah, absolutely, dude. Appreciate it.
See you guys.
See ya.